my pleasure to introduce Jackie Drzyzak from Strategic Information Resources, who's going to get us set here today and start off this webinar. Jackie, let me turn it over to you.
Great. Thank you, John. Thank you all for joining our presentation today. We're very happy to offer you Credit Radar. Now that Credit Radar has been turned on, SIR is delivering credit reports that are even more valuable now more than ever. Everyone who reviews credit can benefit from Radar's information, and we thank you for wanting to learn more. As John mentioned during today's presentation, the phones will be kept on mute so everyone can hear, but we do encourage questions, so please feel free. It's with my great pleasure to introduce to you this morning our primary speaker for Credit Radar. I introduce to you Tim McQuillan. Tim, for over 8 years, has been a part of Credit Expert sales. He's worked on product development and business development. Tim has worked very closely with SIR through the years, and he presents his information about credit, credit scores, and Credit Expert in a way that is both informative and to the point. Tim, welcome, and we look forward to your presentation.
Okay, great. Thanks, Jackie. Thanks, John. Hi, everybody. Good morning. Thanks for joining the call. And as we go through the call, you'll see some questions, some poll questions. We just want to get a sense of who's out there and some of your thoughts on some topics. So if you wouldn't mind responding, please do so through the polling feature. So what's new? Everybody always asks what's new, and I'm very excited about what Strategic Information Resources has brought to you. Their credit reports are now including Credit Radar from Credit Expert. And what Credit Radar is it's a, think of it in a couple different ways, but one is, it's a bubbling up or delivering the key pieces of information you need to know from a credit report. You pull a credit report for a lot of reasons, but there's some real basic stuff that you need to know. What Credit Radar does, it helps deliver that stuff to you immediately. Okay, so Credit Radar, you could think of it as credit information faster. Let's see. As we get started, I'm going to go through some things and show you some samples of what Credit Radar looks like. But keep in mind, for mortgage professionals like yourself, what Credit Radar really does is alert you to the presence of these key things. It lets you know when these things exist, so you don't have to go through the credit report details and find out if they're there or not. So for instance, right off the bat, a mortgage inquiry. Wouldn't you want to know if your applicant has applied someplace else? I know that you can go into the credit report, go back, pretty far back probably, look at the type of inquiry or deduce from the type of lender, or from the name of the lender, what type of inquiry it is, mortgage, auto, general. What we do with Radar is alert you right away. And the stats are pretty high. It's about a third of the percentage, about a third of the population actually apply someplace else before they come to where they get their loan. So when you see that flag go off, you can ask your customer a different set of questions perhaps than you might normally ask them. Some other things that are real important to know, the presence of accounts in dispute. I've heard LOs talk about this as the bane of their existence because there's documentation that you need, there's action the consumer needs to take. What Credit Radar does alert you to the presence of accounts in dispute. Again, could find it someplace in the credit file, but why not know about it up front? The presence of AU accounts. Again, we found these in a pretty sizable amount. About a third of all files have at least one AU account on them. And removal could impact the scores either up or down. It really is a mixed bag on that front as well. So again, alerting you to the presence of these types of accounts. And then the last example I have, before I show you a sample, is mortgage late and other deal breakers or deal delayers. So again, you want to know it up front. If there's a late on a mortgage, that certainly changes the conversation and the time you invest in that loan application. Okay. A couple more things for people like yourself. Yes.
Tim, why don't we launch that first poll that you and I had talked about, just to get a sense of the makeup of our audience today. We have such a large group here today. I'll go ahead and I'll launch that now, and essentially everyone is seeing an option right now on their screen. I think this will give you some great information If people will take a second just to respond to this, we'll go ahead and show the makeup of the audience here. I think that'll help you.
Yeah, great.
Give it another second here. All right. I'm going to go ahead and close it in 2 seconds, so answer if you're gonna. All right. And let's go ahead and share the results of that here so that folks can see that, the makeup of our audience here today. And like I said, we've got well over 100 people that are represented here today, mostly made up of processors and folks in the mortgage sales. We've also got underwriters and management there in significant force as well. All right. Let me go ahead and hide that information, and we're going to pass it right back to you.
Okay, great. So a good, diverse group of folks. That's one of the things I like about Credit Radar is there is something in it for everybody. There's anybody who actually has to use or read a credit report, they can find value in Credit Radar. One of the other things I like about Credit Radar is it forecasts the mid-score. Some examples are 30 days out if minimum payments are made. So it's just a real simple, quick look. You've got, credit scores on 3 different bureaus, for example. The credit's constantly changing. Scores are constantly changing as a result. What we do within Credit Radar is forecast what the new mid-score would potentially be if the consumer were just to make their payments for another 30 days. Sometimes it may be all it takes to put them over the line and qualify for a better loan program or qualify entirely. Conversely, the same could occur if a good account could naturally fall off the account, the credit file, and a person's score might go down as a result. That might be just a good piece of information to encourage a lock with the consumer. Let them know, again, scores are changing all the time. May not be a bad idea to do something sooner rather than later. For whatever reason, your credit score is potentially moving in a different direction than up, like moving down. So, just, again, good pieces of information for you to use, whether you're an underwriter, a loan originator, or a manager. There's good information to use there. 30 days out if additional debt is reported, and I'll show you an example of how this has been used. You tell consumers all the time to not use their credit cards when the throes of a mortgage application. Well, sometimes that's just not practical. People are going to use their cards. With Credit Radar, you can see the forecast of how that mid-score might change if set values of money is added to their credit card. So it's good information for you to share with the consumer. All right, without further ado, I'll show you what it looks like because I've been talking so much about what it is. Let's see what it is. Okay, so again, cover page of the credit report. The first thing you see, it's giving you a bird's eye view of what's in that credit report. It's broken down by bureau. In this case, there's 3, and by applicant. In this case, there's 2. The first thing I like is just this big blue flag that indicates which bureau and what score is the mid. So you can see, okay, it's the applicant that has the higher score in this case. And you can see immediately it's on Equifax and what it is because of that big blue arrow. I mentioned negative mortgage history. In this case, there's none for both the applicant and the co-applicant. That is, there's none in the last 12 months. There is, however, the presence of at least one late on both the applicant and the co-applicant at some point. So, again, good information to know, and it might change the conversation you have or steer the conversation as a result. The next indicator here is the installment loans less than 10 months left. What's great about that is, as many of you I'm sure know, if there's less than 10 months left, it can improve the DTI. It won't be included as a debt. So as a result, in some borderline situations, it might be helpful to know, hey, wait a minute, there's an account here I can pull out of the DTI, rerun the numbers, and it might again help the consumer qualify or qualify for better terms. As you go down to the next third, the mid-third of the Credit Radar report, you've got the mid-score forecast I mentioned. In this case, they're both trending up. The little help icon will indicate some typical reasons as to why scores move up and down. But it could be, again, something as simple or as innocuous as just, an account that's been on the file for 47 months, it's coming up on the 48th month, and after that, it will no longer be included in the score. So that might lower the forecast. Let's see. So you've got that. Collection accounts, these are other things here that I kind of consider deal breakers or deal delayers because you need documentation or you need to deal with it. Again, this is great to give the consumer because there's a ton of exclamation points on there. You can explain to them, you know, listen, I need to work with your credit. I need to do some things. I need you to help me do it. So I need documentation. I need this. I need that. Instead of them getting all caught up in the details of the credit file and what you're asking for, they can just understand you're trying to knock out some of these exclamation points. You're trying to make it cleaner so that they can qualify for the better terms. So again, presence of things, you know, that are bad. Collection accounts, public records, accounts in dispute, authorized user, and here's the mortgage shopping I mentioned earlier. If that flag goes off, it just means they've shopped someplace else recently. Alerts reported by bureaus, that's anything, any kind of flag that you have set up through SIR. If those things are present, then this flag will be illuminated. And then rounding it out, the last third of the credit radar cover page is this mid-score risk. I have one account which uses this in the following way. If they see that the score is trending down and it's below a threshold, they'll know not to charge the appraisal. Sounds kind of unique, but I guess they've been burned before, where for some reason they had to re-pull credit, and sure enough, the person's score had trended down, and it was partially because you know, they use their credit cards. So this is good information for you to kind of help support decisions about what do you do with this consumer, this application, as you go through the next couple months. And of course, it's also good information to give your consumer so they understand the impact of some of the things you're telling them. I'm telling you not to use your credit cards. You're using them very sparingly. You know, we've all heard the adage, don't go out and buy new furniture for your new house. Okay, this is just a piece of paper that you can give the consumer to show them these types of things that you've been telling them all along. And by piece of paper, I mean it's exactly that. Again, it's a cover page of the credit report. You can save it as a PDF. You can take it off the credit report. It's a non-numbered page. You can print it out and give it to the consumer. You can save it as a PDF and email it to them. So it's very portable. And I guess, is there any more poll questions that we should stop for at this point before I move on to the next section?
Yeah, there is actually. We wanted to ask a question here just to try to find out some information about how people do it currently. So let me go ahead and put this out here. How does your organization satisfy undisclosed debt requirements? And we'd like you to just pick from this menu here, if you don't mind.
Great.
We'll give folks a minute to respond to that. All right, getting most of the responses are in now. Let's give it another second or two here, and we should be good. Last chance, folks. All right. I'll go ahead and I'll close the poll, and now I'll share the results here so you can see. And you can see by overwhelming majority right now what clients are doing are requesting a written statement from the borrower.
Okay, great. And,
all right.
And we're really interested in what you're doing, how you're handling these types of issues. Credit Radar is a complement, we think, to some of the undisclosed debt things that you're trying to manage. As I mentioned before in the slides here, in case I forgot to mention it, for consumers, again, this is good information that you can bring to them without having to dwell on the details of the credit report. They can see the differences between applicants, which may or may not be a good thing, but it's probably at least good for a good, healthy, and hopefully jovial conversation with spouses or something about who's got better credit and why. But it takes a lot of the guesswork out of that. People do always talk about things like, well, my credit's probably worse than yours because I have that inquiry or something. So, although credit radar is not designed to say the differences, why someone's credit's better than the other one, it's designed to tell you what key things are in existence across bureaus among the applicants. So it's good information to have and to share with your consumers. And again, less is more. The key things they need to know and to be aware of, because either you have to deal with them or they have to be aware of not making them worse. So less is more when you're trying to describe those types of things. And again, whether the score is trending if they use their credit cards. Again, good information as they're in the throes of a mortgage application. And then what I wanted to share with you now is another version of Credit Radar, which some of you are probably getting something called Credit Assure. Credit Assure is a potential score change, that little +11 you see at the very top on the co-applicant. That is Credit Assure. That's an additional fee service from SIR. And Credit Radar can be presented either with or without Credit Assure. So this version is with Credit Assure. It just moves over the score information a little bit to the left and includes the potential score as well as the net future potential score. And a link, which we'll get into in a minute. This link can take you into the system where you can order credits for products and find out how to get those points. So it's another way to see this information. It's another place for it to exist. If you're not seeing it today, contact SIR about it and find out how you can obtain this service. I think really what you've got here is a unique service combination with the SIR credit report. Fantastic service, great company. They provide an easy-to-read, fully merged and up-to-date credit report. On top of that now, they've gone to market with a unique offering, including Credit Radar. It's a great product. It helps tell you what you need to know. We've gone through that. I hope you get it all. If you don't, certainly ask questions and we can explain more about what Credit Radar is and why it exists. On top of that, if you've got Credit Assure, it is an additional fee for the service, but it automatically identifies a score improvement on every credit file. And that's why I just showing you with the little potential score, the +11 and whatnot. So really, SIR has come to market with a unique service combination. I think any type of loan originator, whether it be at a credit union or bank or a mortgage brokerage firm, or if you're an underwriter or a lender, I just see a little bit of something in this service combination for everybody. So the next steps, check out the Credit Radar testimonials. There's a link, and we can provide a link to that in the thank you email that goes out from this webinar. There's one of the Scotsman's Guide top originators, I think it's from 2 years ago. He's got a few videos out there that talk about Credit Radar. He gets it, he uses it, and he explains in like one video is 30 seconds, one is like a minute and a half. He explains how he uses it and why he likes it. Use it. There's no charge. It's included. As I mentioned, SIR has done something unique here. They've invested in it to help you, and just encourage that you use it in your process. And then, unless there's any more polling information or polling questions, was there one more poll? Because I wanted to get into one more thing. I don't know if you guys wanted me to ask the poll question now or get into this last part first.
Tim, this is Jackie. No, we're going to move right along. We're done with the polls.
Okay. Okay, great. Okay, I wanted to talk a little bit about this more link that I showed earlier. If you're getting Credit Assure on Credit Radar, then you also have this more link. And this more link, you can click on that and it can bring you into ultimately Credit Expert Essentials. And that can tell you how to potentially improve scores. There is additional fee for that. I'm not sure what it is exactly from SIR, but it's not too bad. People use this all the time. Somebody on the phone probably use it. I just wanted to restate what this is. You click on the more link, you're brought into the system where you can select the consumer name. In this example, it shows $6. I'm not sure if that's up to date. You can select a few different parameters like the mode. You hit next, and you're brought to the Credit Expert Essentials report, which tells you, again, the potential score change, along with a description of the actions. Okay, it's very specific. In this case, pay down the balance to $352 on your Chap 1 bank, and do a rapid rescore through SIR. Now, you don't have to do a rapid rescore all the time. You can run the product in 2 different modes, either an immediate time frame, which is what this is, or a 30-day time frame. But for an additional fee, it's nice to have a tool like this that's been tested and in the market for over 8 years. And it's just looking for the most probable and the most cost-effective ways to potentially improve scores. Okay, so we go in, we look at the data, and we look at, whether it's a pay down or a balance transfer or opening a new account. We try to find out how much do we pay down to improve the factors and get the consumer the potential score improvement that we're looking for. Okay, so it's a great tool. The last page of this is all included in the same fee, is a little bit of a credit analysis, and that tells you what's impacting this person's bureau score the most. So again, it's per bureau. The payment history in this case, an Amex, whether there's a charge-off status, reported at some point in the past. So again, the key thing here is you got specific information per score, and it's just, again, just helpful, something that can help you navigate the complexity of credit without, spending an arm and a leg or having to guess. So anyway, so that's really it. I know we've been kind of, I don't know if we've been too quick or not. It's hard to get a read when you're on the web. You can't tell by reaction. But I hope this has been informative for everyone. Certainly, as Jackie had mentioned, we encourage your questions. If you have any, feel free to use the chat feature within the web service or follow up with SIR. There's a phone number here. We certainly encourage your questions, your feedback, and again, we appreciate your time and your energy on the call today.
Great.
I guess given that, I can turn it back over to John or Jackie if you want to add anything to that.
No, thank you very much. Great presentation. Jackie, do you have anything to add?
Nothing to add. Thank you, Tim. We did actually receive several questions, Tim, while you were going through the presentation, and I guess that's probably where we should go from here.
Great.
So I guess I'll go ahead and ask the first one. The party asks, how is this applicable to consumers who do not have a credit history? Will Credit Radar be able to tell us what their credit score will be if they pay their loan on time? It almost seems like two questions, Part A, Part B.
Right. Well, certainly for Part A, I'm going to put the sample up here just to reference that. For people who don't have a lot of credit, you probably would not see a lot of indicators because it's a thin file. They haven't had a chance to be late on an account. They don't have one, right? Let's say they're really thin. They don't have a credit score. If you see a forecasted score improvement there, then that means, let's say they opened one account, but it was a month ago, and the requirement might be 2 or 3 months that the account be open. If you see a forecasted score improvement, and there is a 3-digit number on there, that means at some point in the near future, they're probably going to have a score, and it is the score that's indicated. Okay, so that's how it could help on a really thin file or no credit type situation. And then,
Okay.
I'm sorry, what was the second part?
Second part, will Credit Radar be able to tell us what their credit score will be if they pay their loan on time? It's more
I see. Right, like we're going to originate a loan, and then what would the score be if a new account was added, a new mortgage loan or something like that?
That's what I'm thinking.
In another product of ours called the What If Simulator, you can go in and you can simulate the potential score improvement of adding a mortgage, a credit card, an auto loan, and you can forecast it out, say, 2, 3, 4, or even 6 months. So there is a way to do that within the Credit product suite. It's called the What If Simulator, but it's currently not part of Credit Radar.
Okay, that makes sense. Okay, I'm going to ask one additional question, and then I think John has a few as well. One of the other questions that came through the question online is, what is the additional fee for Credit Radar? And that's actually something that I can answer. And the answer to that question is Credit Radar through SIR is being offered as a complement to the credit report. So the answer would be there is no additional fee to what you're currently paying for your credit report. As Tim had mentioned earlier, this is a very unique arrangement that we are able to offer Credit Radar to our marketplace as a complement.
Great. And you're correct, Jackie. I do have a couple of questions that we collected during the presentation. I do want to remind everyone, we do have such a large audience on here. We'd love to have as many questions as we can. So remember, you just go right to your control panel. There's a spot there where you can type in your question. So if there's information that we've gone over here today or there's something you're not quite getting, feel free to throw a question in here, and we'll either answer it now or we'll come back to you afterwards to answer it, all right? And we'll keep everyone's information and contact information confidential in the Q&A part of it. All right, so questions I have. One is, can I get a copy of this presentation? We saw that a couple of times actually come up here today. So the answer is yes. We can communicate back with attendees that were on this call here today with a copy of this presentation. I have a couple of others that came in. Here's one, Tim. Can a loan officer give a Credit Radar report to a borrower? And I think you kind of addressed that one that came in early on, and I think you maybe answered it afterwards. But why don't you just quickly retouch on that?
Right. We encourage you to provide this to the consumer. It's a non-numbered page of the credit report, and you should be able to just save it as a PDF and email it to them, or print it out and mail it, scan it, whatever. Yes, you can give it to the consumer.
Great. Another question that came in was, can you provide some examples of how loan officer or borrower loan officer and or borrower conversations may be different after reviewing Radar?
Well, a lot of things like the presence of an authorized user, you might not even know you had one. And it could be holding down the score. Yeah, I signed on for my son, who's now never pays his bills. He hasn't in 3 years. Why is my score so low? Well, it's because you signed that you being the authorized user has dragged you down on that account. Mortgage shopping, recent inquiries. That's I just love that one. When you watch the videos on YouTube, with the loan originator talking about it, he mentions this one too. It's just, instead of asking the consumer, what kind of house are you looking for or something else, you can ask them, what did you think of your other, have you been anywhere else? What did they say? I think it changes the conversation.
Yeah, I think it does. I think it's a much deeper conversation with all of the details and indicators that you have here in front of them, that you'll be able to have a much more productive conversation with them. In the negative mortgage history section, we had a question. Someone asked about that. They wanted to know if equity loans and HELOCs would be included.
If they're coded as mortgage, then they would be. But most are coded as revolving, like a HELOC is revolving typically, unless it's over a certain dollar amount on a certain bureau, then it could be recorded as mortgage. Okay? So if they were late on that particular type of HELOC, then it could show up. But for the most part, as long as it's coded as a mortgage account, we're going to read it that way.
All right, that's great.
Okay.
We just got a couple more questions that are coming in here. Hold on just a second, Tim.
Uh-huh.
Tim, another one that just came in here is saying if someone is only an authorized user and it's showing up as a 3 on their credit report, does it affect their score? And
I'm not sure what a 3 is. Sorry.
They're not I'm not sure what that meant as well as the 3. That's it's showing up as 3 in quotes here. It's if someone's is only an authorized user and it's showing up as a 3 on their credit report, does it affect their score?
Right. If you're an authorized user, you get all the benefit and all the downside of the account. So if my son, who's 20 years old, I don't have a 20-year-old son, but I'm just using this as an example. If my son, who's 20 and has no credit, and I've got a credit card, and suddenly I give him the AU, I say, you're an authorized user on my account, then he gets all the benefit, all the positive payment history, the current outstanding balance, the credit limit. He gets all those benefits, as well as any derogatory items. So if I was late, or if I'm 110% of my credit limit, he gets that as well. So he gets the mirror sort of thing of my credit for that account.
Yep.
I'm not sure what the 3 is. Sorry.
Okay, good. I think you've answered the question, though. I believe that's what they were looking for. We had another question that came in about what is the additional cost for Credit Assure or Expert? And Jackie,
yes,
it's
I
a
do.
pretty low number.
It is. Actually, I have the answer to that. The question came in, the cost of Credit Assure, and that would be something that you would coordinate through SIR, either calling our office or talking to your sales rep. But the cost itself is 10 cents per name per bureau. So on a 3-vendor MTS report, you would be looking at an additional 30 cents.
And another question came in. At one point, we talked about the what-if simulator during the presentation as an alternative solution. That's something that you could get through SIR as well. And one of the attendees asked, is this something that we can utilize now? The answer is yes on that, and they were looking for information on how. Why don't we make a connection with that person and their sales rep so that they can talk a little bit more about it. And for any of you that might have interest in that what-if simulator, that if you recall during the presentation, one of the questions was, what's the impact of the score going to be on this person that has limited credit by adding a mortgage or adding this positive trade line? What would that do to their score? And the what-if simulator can do just that. And it is definitely available through SIR, and if you're interested, you can follow up with your salesperson on that, and the person that asked that question will make that connection for you. Thank you.
Great.
Any other questions, folks? Looks like we've answered the ones that have come in so far. Jackie, do you have anything else?
I really don't. We are really pleased to have had Tim on with us today, and we really are delighted to be offering Credit Radar as a complement to the credit report. We hope that you all found the data useful to make it the most of it, I guess. Any additional questions or follow-up, we'd love to hear from you. Tim has been wonderful, and I know is offered to be available for individual client-by-client conversations if that's necessary as well. So with that, I want to thank both John McTighe and Tim McQuillan, and most of all of you for being on today.
All right, folks. Thank you very much, Tim. Great job. Thanks.
Thanks, everyone.